Congratulations, you are progressing swiftly through our home buying process series. And now it's time for the exciting third video. We're delving deep into the post-contract phase. What unfolds once your offer is accepted. So get ready, because your journey forward hinges on 4 conditions: the safeguarding of your contract through escrow, the financial facets, meticulous inspections, and the all-important appraisal. So stay tuned as we unravel your next steps in this video. Things happen pretty quickly in the first 3 days of the contract. So this is not the time to bury your head in the sand or take a vacation, even if you have a closing scheduled for 30 to 40 days away. You are going to get in touch with the title company or attorney the seller has chosen to perform the closing and get them your earnest money within 3 business days of the fully executed contract. You are going to schedule a home inspection, which will typically happen within the next 2 to 3 days. And you are going to contact your lender and give them a copy of your contract so they can start processing your loan. So now let's go into depth about each one of these. Your escrow money deposit. Your realtor will send over the signed contract to the title company and they will open a file for you. They will reach out to you via email and phone and send you a secure link to access your file. This file contains wiring instructions to take to the bank so you can wire your escrow funds. The title company will never send you wiring instructions via email. So if you get wiring instructions via email, you can consider it to be fraudulent. Never wire funds without speaking directly to the title company. Then the title company will begin researching the property to ensure it is free and clear of any liens and that the person selling you the home has the legal right to do so. A word of caution: if you do not get your escrow deposits to the title company by the date specified in your contract, you are considered out of contract and the seller can sell the home to someone else. So get those funds there. So let's talk about the inspection period. You'll want to arrange a home inspection. It's likely your contract states the number of days you have to complete all of your inspections. Typically, this is between 7 to 15 days. You may have also heard this time frame called the due diligence period. You should check out this video here to learn more about the due diligence period. Hiring a home inspector is crucial. They'll thoroughly check the plumbing, electrical system, appliances like the stove and dishwasher, and even explore the attic and examine the roof. Essentially, they'll investigate everything about the house and provide you with a detailed report on its condition. This report will help you determine if there are any major deal breakers that would lead you to cancel the deal and get your deposit back. Alternatively, the report may identify some minor issues you could request the seller to fix before moving on, or if the problems are minor, you might accept the house as is. In some cases, there may be a few significant issues and you could negotiate with the seller to lower the sales price, allowing you to handle the repairs yourself after moving in. However, it's important to be aware of these issues before moving forward with the contract. Apart from the general home inspection, you may consider getting additional inspections. For example, you could have a roofing company perform the roof inspection to ensure it's in good shape and estimate the life expectancy. A termite inspection can help you identify any termite problems that might impact the structural integrity of the home, or does it simply need to be treated for termites, or it's clear of termites. If your home has a pool, consider getting a pool inspection to determine if there are any leaks and if the mechanics are working properly. Be advised that one inspection could lead to another inspection being ordered. Overall, there can be several inspections you can opt for, but it's up to you to decide which ones are necessary. Remember, while the seller is legally obligated to disclose any defects, they may not be aware of some hidden issues. Just make sure you get your inspections completed during your inspection period. Now let's talk about your mortgage loan. Your lender will begin processing your loan for approval when they receive your contract, and it will be subject to an acceptable appraisal. The loan originator tries to get this approval within the first week of your contract. So if they ask for additional documentation, you need to get it to them as quickly as possible. During this time, you're going to hold off on any spontaneous purchases like a boat or a shiny new car or furniture for your new home. You are going to avoid major credit expenses that could affect your loan eligibility. Hopefully, you have avoided making any such purchases while you have been looking for your home. Even if you qualify for these additional purchases, just applying for financing on these items will ding your credit score and possibly increase your interest rate and fees. You want to ensure you are in the best position to secure the best financing possible. Hopefully, you have already ironed out your credit and income situations, but situations can arise during your loan processing that wasn't there when you first were pre-approved. Lenders ask for some crazy documentation and can often seem unreasonable at times. They might dig up that time when you were late on your electric bill 3 years ago and ask you to explain what happened, or ask you about the time you co-signed for your brother's car and he was late with the payment. Things like that can show up on your credit history, and they'll want a letter from you clarifying the situation or supporting documentation. Getting that information to them as quickly as possible is important because the longer it takes for you to get them the information, the longer it'll be before you can get your final loan approval. The last item needed for a full loan approval is the property appraisal. Couple of things can happen. One, the property can appraise at sales price or even higher. If it's higher, that's great news for you. You're already starting out with some equity. Many buyers have asked me in the past, if the house appraises higher than the asking price, do they have to give that difference to the seller? Absolutely not. You get the benefit of starting out with a little more equity than you thought. If the property doesn't appraise at the offered price, you have a couple of options. You can ask the seller to lower the sales price to meet the appraised value, or you can come up with a difference at closing. If they refuse to renegotiate, you can still cancel your contract and get your deposit back. Something else to keep in mind during the process, if you initially said you'd close in 30 days, but it ends up taking 45 days, the seller isn't obligated to give you an extension. They might agree to it, but make your deposit non-refundable or ask you to make an additional deposit. So always making sure you're sticking to the terms of the contract and performing accordingly to avoid any risk of losing your good faith deposit. Some other things to keep in mind: if you decide to cancel the contract during the inspection period, before the loan appraisal, or before the loan contingency period ends, you'll be entitled to get your earnest money back, but you will not get your inspection costs back. If you decide to move forward with the contract after inspection period is up, your financing has been approved, the property has been appraised for the offer price, and you then decide not to close, you will lose your escrow funds and all of the cost for the inspection and the appraisal. So if you breach the contract at any point, the seller would have the right to keep your earnest money. So it's essential to always fulfill your obligations according to the contract and avoid anything that might jeopardize your earnest money. And now, the moment you've been eagerly waiting for, closing time. Everything has gone according to plan, perhaps with some negotiation after the home inspection or not, but everything is ready to go. The title company will prepare a closing statement and balance their fees with the lender. The lender and the title company will go over the closing cost fees due at closing beforehand, but don't be alarmed. Sometimes this is done 24 hours or less before closing. You will then go back to your bank and have the bank wire the funds needed for closing to the title company. Before closing, you and your realtor will do a final walkthrough to make sure there are no surprises, like a giant hole in the wall or missing fixtures that were supposed to stay. You are going to ensure that the house is in the same condition as when you made the offer and that the seller has completely moved out without leaving a mess. Then you will go to the title company and sign your closing documents. During the closing, you'll sign documents saying, "I promise to repay the loan." Yes, they really want to make sure you understand that. It's all about your commitment to repay the loan, and if you don't, they can foreclose on your house. So make sure you're comfortable with those terms before signing. Once everything is signed and the money has changed hands, guess what? If you're purchasing a home in Tampa, you'll receive the keys to your new home right then and there. And you can start moving in right away. And that's it. Those are the steps to buying your first house. So let's wrap it up with a few final thoughts. Finding an agent is key. They'll be your advocate and guide you through the process. Trust me, we do this every day, and we will make it easier for you to understand. Being pre-approved is a must. It gives you a clear idea of what you can afford and your monthly payments. Remember, flexibility is important in negotiations. If there's competition for a house you love, I need to offer more than the asking price or make your offer attractive in other ways. Also, don't forget to have a nest egg for unexpected expenses. When I bought my first home, I had a water heater disaster that flooded my laundry room and kitchen. It was a mess. So be prepared for those surprises that can pop up when you least expect them. Let's talk about the beauty of home ownership. When you rent, you hope to get your security deposit back. But when you buy a house, you're building equity. If prices rise, selling after a few years can mean a nice little profit, maybe in tens of thousands of dollars. That's a return on investment you won't find in many other places. So why keep paying your landlord's mortgage? Start building your own equity and have a place to call home. And when the time comes to moving on, you'll have some equity to help you buy a new home. Thanks for joining me on this video series. If you found it helpful, give it a thumbs up and share it with your friends who are considering buying their very first home. If you're in the Tampa Bay area, I'm Tracey Pines. Feel free to reach out to me if you have any questions. I'd love to hear from you, assist you however I can. Thanks for watching and best of luck on your home buying journey.